Okay. Good evening, everyone. Welcome to this session. Thank you for joining us. My name is Sivanithi. I'm the senior editor and trainer for SIAS. Thank you for joining this Corporate Connect session. Corporate Connect is an initiative organized by SIAS with the help of SGX to raise the profile of listed companies, to connect listed companies that are perhaps not so well known in the market with retail investors. So let's welcome today's feature, which is ISEC Healthcare, as well as our audience from Mumu Live. Okay, that is today's featured company. Now, before I move on to introduce the personnel from ISEC Healthcare, we always start off our Corporate Connect sessions with a market update. Today's market update is a recorded session done by Gerald Wong, who is the founder of Beansprout. After Gerald's presentation, I will turn over the camera and the microphone to the CEO and Vice Chairman from ISEC Healthcare. But first, the presentation from Gerald Wong.
Hi everyone, my name is Gerald, and for the next 10 minutes, I'll be providing a quick update around what we are seeing in the financial markets. So let me start by sharing my screen. Hey, so my name is Gerald. I'm the founder of Beansprout. We provide financial insights on Singapore stocks, REITs, bonds, ETFs on our platform, growbeansprout.com. So if you'd like further details after today's sharing, do visit our website. Okay, the usual disclaimers that today's sharing is for information purposes only and should not be taken to be financial advice. Firstly, a very quick recap around the market. We have seen global markets actually having a very good run so far this year. For many of us who are familiar with the S&P 500 index in the US, as of 6 December 2024, we have seen the index going up by 28%. So that would represent a very significant growth in 2024. A lot of these gains would be led by the tech stocks, where we see that the Nasdaq is up by an even more significant 32% year to date. For investors who are looking at the home market, we have the STI with the 17% gain as of 16 December 2024. So once again, the positive sentiment around the US markets has also translated into improved sentiment in the Singapore market. Okay, so what is actually driving this investor optimism? First and foremost, we see that the economic data that has come out continues to be strong, and that has actually helped to ease investor concerns about a potential recession. So one of the key data points that we would constantly track would be the US labor market data, and this is represented by the US non-farm payroll data. The latest data just came out last week, and for the month of November, we saw that there were close to 225,000 jobs added in the US, and that was slightly stronger than what the market was expecting. But more significantly, what we can see from this chart is that in October, the labor market data was impacted by some of the temporary shifts, such as hurricane in the US. But since then, we are seeing very strong jobs growth once again, and that continues the trend that we have seen in September. Okay, so this has actually helped to allay concerns about weakness in the US economy. At the same time, what we are seeing for inflation in the US is that it has moderated. For the month of October, the US Consumer Price Index rose by 0.3% compared to the previous month. And for the last 3 months, we have effectively been at this 0.3% increase compared to the previous month. And this has actually slowed down very significantly from 2022, 2023, and helping to drive investor confidence that the worst of the inflation is actually behind us. Okay, so those are some of the latest data points that have come out. Economic data would suggest that the US economy remains strong, inflation has moderated, and all of it is helping to boost confidence towards the US stocks. So how has this translated to the markets? What we see here would be the latest expectations around what the US Federal Reserve is going to be doing. And I think what I see here is that for the upcoming meeting in December, uh, investors are putting in a 86% probability that we will see a rate cut in the upcoming meeting. Okay, so with the inflation actually easing, no major surprises on the economic data side. So with that, the US Federal Reserve is expected to continue on its path of cutting interest rates. And what we see here going to 2025 is that the rate cuts are expected to continue, such that by the end of 2025, we might be looking at a further 3 rate cuts compared to December this year. Okay, so with the rate cuts on track, that is once again driving investor optimism towards the stock market. Okay, so we do see this in the US government bond yields. This is the US 1-year government bond yield. And what we see here is that following the Federal Reserve meeting in September, while the US Fed kept lowered the interest rates then, the bond yields actually rebounded to above the 4.4% levels. Okay, this was also partly driven by the results of the US election, given that the president-elect Donald Trump is expected to have some policies that are more inflationary in nature. So, for example, tariffs or some of the control on immigration are all expected to lead to higher inflation, which is why the bond yields have actually gone up in October and November. But what we have seen over the past 2 weeks is that the bond yields have retreated slightly. Part of this is driven by some of the appointments that President-elect Donald Trump has made, which actually led to investors' relief that maybe the policies that he will pursue may not be very extreme. And then at the same time, the economic data that has come out with no major surprises has once again reinforced investor confidence that there will be further rate cuts. Okay, in Singapore, we see a similar trend where the GDP growth continues to be fairly healthy. For the third quarter of this year, we actually see the economy growing by 5.4% compared to the previous year. Okay, so we see the acceleration over the past few quarters, and that is once again reinforcing what we have seen in the US, where there is resilience in the economy. So with that, the Singapore Ministry of Trade and Industry has raised the expectations of Singapore's full year growth. Previously, it was expected to be at the upper end of the 1 to 3% range, but following the strong GDP growth data in the third quarter, that has been revised upwards to 3.5%. Going to 2025, the economic growth is expected to remain steady, with a growth of 1 to 3% expected next year. Okay, so generally a fairly positive backdrop in terms of the economic growth prospects. So in terms of how that's translated to bond yields, what we see here is the Singapore government bond yields have pretty much moved in line with the US government bond yields, where we saw this rebound in September and October, but in the last few weeks, some of these bond yields have retreated as well. So looking ahead into 2025, what we see is that the global economic growth is expected to remain fairly stable. This would be the forecast by the International Monetary Fund. And what we see here in terms of the expectations is that the global economy is expected to grow at 3.2%, which is stable compared to the 2024 expected growth of 3.2% as well. Okay, so over the past few years, we have seen fairly stable economic growth, and that has helped to drive up sentiment towards the global stock market. And what we also see here is that across both advanced economies and emerging markets, the growth in 2025 is expected to be stable compared to the 2024 levels. Okay, so in summary, what we have seen is that the global economy has been resilient, and generally the expectations is that the growth in 2025 is expected to be fairly stable. In terms of inflation, they have moderated from the peak, and that is driving investor confidence that there may be more interest rate cuts coming up in 2025. Okay, so with all of that as a backdrop, the Singapore stocks have actually reached a 17-year high, with the strong economic growth as well as expectations of more rate cuts going to next year. Okay, so with that, I would finish my sharing on the global markets, and I hope that is something that you find useful. If you like more updates, do subscribe to our free newsletter where you'll be able to get a weekly update around what is happening in the financial markets. Thank you so much, and I'll hand over back to the moderator.
Right, thank you. Thank you so much, Gerald, for that presentation. Generally, a positive outlook for stocks and the economy. Okay, now we move on to the main item for tonight, which is the corporate presentation by ISEC Healthcare. Just a little bit about the company. They are an established regional provider of holistic eye care services with ambulatory surgical centers. They are backed by a 15-year track record. They have a strong brand equity, and ISEC Healthcare is recognized for its world-class and high-quality eye care services. Its two main markets are in Singapore and Malaysia. In Singapore, it provides specialist medical ophthalmology services at the Asia Pacific Eye Centre in Gleneagles Hospital. All right, so with that in mind, I'll turn over the presentation to Dr. Wong Jun Shan, who is the Chief Executive Officer of ISEC Healthcare, and Dr. Lee Hung Ming, who is the Executive Vice Chairman of the company. Over to you, Dr. Wong and Dr. Lee.
Thank you. I'd like to thank the organizers for inviting me to share to introduce our company. And my name is Dr. Wong. I'm the CEO of ISEC Healthcare Limited. And together with me today, we have Dr. Lee Hung Ming, who is the Executive Vice Chairman of ISEC Healthcare Limited. Okay, next slide, please. Okay, we have two business segments in ISEC. Generally, the specialist eye healthcare services, and the second segment is general health services. However, the specialized eye care health services is our main business segment. We have a small group of comprehensive general practice in Singapore, but I think most of our income comes from the eye services. Now, we are a group of comprehensive eye care provider, and we specialize in all fields of ophthalmology, including cataract, refractive surgery like lasers, vitreoretinal diseases, corneal transplant, and so on. Our general medical and GP clinics consist of 5 clinics under the Temasek Medical Center Group, are located in Singapore at Sembawang, Woodlands, and UT. Next, please. Now, our focus is to build a strong presence in Asia Pacific region. As of November this year, we already have 11 operating eye care centers in Malaysia, namely in Kuala Lumpur, Penang, Malacca, Johor, in the state of Perak, including Ipoh, Kampar, and a few other cities in Perak, and in East Malaysia in Kuching and Sibu. We have one main center, which is Asia Pacific Eye Center in Gleneagles Medical Center, Singapore, and an outreach clinic in Singapore too. And our foray into Myanmar, we have a main center in Yangon, which is doing very well, and also have a satellite clinic in RU Hospital in Myanmar. Next, please. So this is just a few pictures of our specialist center. We call the Center of Excellence in Eye Care in Malaysia, Singapore, and Myanmar. Next one, please. Now, in 2024, there were some new developments. In the city of Malacca, we have expanded our existing center since July 2024. With the expansion, our Malacca center is now about 50% larger than before, and also the revenue has increased correspondingly. And in Perak, we have 3 new centers in addition to the existing 2, namely the Manjung Eye Center, Teluk Intan Eye Center or Teluk Anson Eye Center, and Taiping Eye Center. And these have just obtained operating licenses from the Ministry of Health Malaysia to operate. And this commenced operations in the month of September. And in Klang, in Selangor, we expect to start our new joint venture with a Durham Group. And we target to commence operations in the first quarter of 2025. Next. And one very exciting development is that our flagship center, which is in Kuala Lumpur, has entered into a sale and purchase agreement with a developer to acquire certain strata title units in a new building to be constructed. And this is under construction now. This is a 14-story building, as you can see here, which houses our main flagship center. This is a purpose-built medical center and will be constructed according to our specs. Now, with the new center, there will be additional floor place of about up to 69,000 square feet, which is about 3 times bigger than existing center. And we are forecasting that this building would be completed by end of 2025. And hopefully we can commence operations on this new flagship center in 2026. Next. Now, we are one of the biggest group of private eye doctors in this region. As of 30th of September 2024, we have a total of 68 specialist eye doctors working together in the group, of which 43 are full-time and 25 part-time or visiting or independent doctors. This compared to last year, which we only have a total of 59. So we hope every year we will increase organically as long as we can identify good and well-trained doctors. We would entice them to join our group. So this ISEC is currently, I believe, the largest group of its kind in Southeast Asia. Now, what are our competitive strengths? So we have been well positioned, all right, for almost I think coming to 17 years now in specialist eye care industry. In Malaysia, where we started our center in 2007, and we started with a group of very highly specialized and experienced eye doctors. Started a platform because we wanted to build a center of excellence in eye. And right now, as I mentioned, we have so many specialist doctors now. We are able to provide comprehensive range of eye care services to the public. And what we are well positioned is that we are staffed with very highly qualified and experienced doctors. We do have a certain minimum requirement of who can join us, right? They must be well regarded in the community, in the eye community before they can join us. And because of the number of doctors and our scattered location in Malaysia and Singapore, we are well positioned to capture the growing demand for private eye care services in this region. Our business model provides for strong cash flow. As you know, in medicine provision of services, most of these are either cash for service or they're reimbursed by insurance. So our cash flow is very strong. And because of our know-how in the industry, we are able to replicate our business model with new doctors and also able to equip our centers with state-of-art technology because of our experience across all new markets. And most importantly, our business model aligns the interests of our equity partners, doctors, with our ISEC group, because most of doctors are actually shareholders in the company. Next. So our strategy include that setting up new greenfields, joint ventures, and also expanding existing centers, and also through M&A to grow into this region. So we target the Asia Pacific region as our potential target for our business. And we have also been actively expanding our talent pool of specialist doctors and management staff. We build regional networks with referral centers, and also we are mindful of investing in the latest proven technology so that we are always up to date. Now, next slide, please. Besides Malaysia and Singapore and Myanmar, ISEC is also interested in looking at a few key markets, namely Vietnam, right, where we think there is a lot of potential. It's a big market with more than 90 million people, and it is growing very fast. So we will continue to look at opportunities and engage in discussion in market like this. Next. Let's look at some key financial highlights. So I show you the financial highlights for the 9 months ended 30th of September 2024. For the first 9 months, right, we reported a revenue of 54.4 million Sing dollar, which represents a 4% year-on-year growth in revenue. Our profit after tax in the first 9 months is 10.9 million Singapore dollars, and which is actually a 9% growth year-on-year. And our margins are very good. Our gross profit margin is about 43.8%. That means for every dollar in the top line, all right, our gross profit is 43 cents. And our net margin, all right, that means that after paying all the taxes, etc., we can expect 20 cents of every dollar that we sell. Next. And this is looking at the trend. We can see that in the orange color label, in the box, we can see that in the first 9 months, we already achieved about 78% of total financial year 2023 revenue. So in the prior year, compared to the prior year, our revenue increased by 7 million or 11%, all right, to 17 million compared to year 2024. So, sorry, let me rephrase that. In 2023, our revenue increased to 17 million, which represents 11% growth as compared to the year 2022. Now, generally, you look at the trend here, the group can show an upward trend on revenue growth between the year 2020 to 2023. Next one. And this is the year-on-year first 9 months of 2024, revenue increased 4%. Most of this revenue came from the eye care services. Whereas the general health services probably stagnant because we did not increase any clinics over the last few years, general health clinics. And because of the decrease in COVID-19 swab tests performed, so our business activities, our GP clinics in Singapore remains flat. Next slide. And this shows the breakdown by geographical segment. You can see that in the orange color pie chart, which represent the business from Malaysia. Malaysia is a very important market for us because 80% of revenue come from Malaysia. And this is fairly stable if we compare whether in 2023 or 2024. And this is also good news because Malaysia has a much bigger population compared to Singapore. And with a growing affluence, we think there would be a lot more opportunity for us. Next slide, please. Now, for the profit attributable to owners of company, in the first 9 months, all right, we were able to generate a profit after tax of 10.8 million, and of which 83% of the profit are attributable to owners of company. In 2020, our PAT was only 4.7. It's basically due to the pandemic effect and also impairment loss from goodwill arising in operations in our general health services segment in Singapore. Next slide. And this is a group PAT again, just to show, for the same period, we have increased 9%, all right, to 10.9 million. Next. Now, our dividends, we have always been very good in paying out dividends and rewarding our shareholder. I think this is appreciated by some of you. You see the total payout, right, that we have given. If you look at the red bar, all right, it hovers between 70% to about 90% of profit, all right. So this year, of course, we have not declared the final dividend yet. So at the interim dividend was actually paid in the second quarter, which was probably about 16% of our profit. So we hope that if we are able to do well, we would try to reward our shareholders whatever excess money in excess of our expansion and growth plans, we would try to return to our shareholders. Next. These are some of the financial figures, net asset value per share, which is growing steadily, and also earning per share. Next, please. So what's the outlook? I think overall, we remain positive as we believe we are well positioned to capture the growing demand for private eye care services. Why do I say so? Because the population in this region is rapidly aging, and ophthalmology is essentially an age-related eye problem. All right, so if we see older patients, we are able to see a growing demand for eye-related services such as cataract. Even among the younger population, we see more cases of myopic issues related to lifestyle and prolonged screen time. So we believe also with greater awareness and also digitalization, we believe there will be a greater need for ophthalmological service in this region. Meanwhile, the rising affluence in our market and also in developing countries also lead to more patients seeking out private eye care services to avoid the long queues at public hospitals and to avail themselves to higher quality care traditionally associated with the private healthcare. And so to serve our growing needs for ophthalmology service, we continue to explore opportunities for expansion across both existing and new markets. So we are quite upbeat that in the next 12 months or so, there will be new centers in new countries, all right, in the ISEC stable if all our plans are put into fruition. Next slide. In short, this is my slide presentation, and Dr. Lee is also happy to take questions from you all. And with that, I hand over to the moderator. Thank you.
Thank you, Dr. Wong. All right, ladies and gentlemen in the audience, please submit your questions. Type your questions into the Q&A box. There's one question from a gentleman named Andy Wong. Have you been able to raise prices in Malaysia and Singapore? Any recent issues with insurance claims in Malaysia, and how large is medical tourism as a percentage of revenue? I think maybe we just take one question at a time.
Okay, I think I'll answer the Malaysian part, and then the vice chairman who's based in Singapore, Dr. Lee, will answer Singapore part.
Okay.
Okay, we in Malaysia have a very prudent policy in how we want to price our services. First, if for those who do not understand Malaysian scene, the amount that the professionals can charge the patient is actually capped by the government. In other words, we have a fee schedule that is fixed by the government, so we cannot increase it beyond the fee schedule. And as the fee schedule not revised every year, so we cannot increase our prices until the next revision is due. So generally, from historical, the Ministry of Health revises the schedule once every 8 to 10 years. So we foresee that the next revision will come in 2 or 3 years' time, and hopefully we can increase a bit of revenue, at least to catch up with inflation. Whereas our selling price for others non-fee related, such as facilities and consumable or drugs, we are quite competitive. While we are able to vary a bit, we want to make sure that we do not price ourselves out of the market. So we are very cognizant that we need to be accessible to all. And despite all this very prudent policy on how we price ourselves, where 80% of the income from Malaysia, we are still able to maintain a very good PAT margin, right, of 20%. If you are familiar with healthcare as an industry, especially provider of healthcare services, I think this is a very remarkable percentage, because a lot of facility providers are usually in the single digits PAT, all right? So we are actually quite efficient. And as for the health tourism in Malaysia, Malaysia is very big on health tourism because of competitiveness in our ringgit. Most of our health tourists come from Indonesia and also in Middle East and Africa. So in Malaysia, about 30 to 35% of our healthcare services are done on foreigners. So I pass to Dr. Lee to talk about Singapore State of Affairs.
So in terms of a percentage of medical tourism in Singapore, the medical tourism constitute about 20 to 25% of our revenue in our Singapore sector. As for the price increase or price reduction, I think generally most doctors are now quite constrained by the insurance companies that impose a limit to how much doctors can charge. So therefore, but the insurance company do increase from time to time the percentage of what the doctors can charge as a medical fees. But secondly, the other thing is about LASIK and refractive surgery, which is not insurance claimable, but we also could not really increase the price of the LASIK mainly because of the competition. So what we do is in terms of price increase, we will try to increase our revenue by increasing the number of procedures that we do, and by also making our results good results and good outcomes so that we can attract more patients.
Just to answer the insurance claim, I think in Malaysia, we do not have a big issue with insurance. We are on panel of some. If you are not on panel, a patient can still claim after they have obtained the services from us, as long as that we do a bona fide procedure, and I think that's not an issue. So just for the perspective, about 30 to 40% of patients are insured. So basically, a lot of patients are still paying out of pocket. That's one reason why we want to make our services accessible.
Great. Thank you so much for those replies, gentlemen. There is another question from Yong Chang Lai. How will ISEC Healthcare attract more patients in Singapore, especially with so many other healthcare providers? Any difficulties in terms of rules and regulations that ISEC Healthcare needs to follow in Singapore, especially when introducing new services or building new facilities?
Yeah, I think there are a few prongs that we can attract the patients. The most important is to have a ethical practice by doing the correct things. And equally important is to have a good clinical outcome. With clinical outcome comes good reputations, and with good reputations comes more patients coming to us. So that we never compromise on any of our clinical practice and clinical management. As for any new regulations in terms of providing services, I think Singapore is very healthcare friendly. I mean, we can, as long as any procedures that are have been approved by FDA or approved by the Health Science Authority of Singapore, there's no problem in introducing new services, new technology, and especially new lenses to our population. I think there's no problem about it.
Okay. So, any other questions from the audience? If not, just let me ask this question. You guys have been listed for 10 years now on Catalyst, our second board. I'm sure by now you'll be looking at possible upgrading to the main board, right? Is this, have you all looked at this? Is this in the works?
Yeah, this is actually in the works, all right? So we have already fulfilled all criteria, all right, for being bought in terms of financial and also our track record. The only thing that we are still trying to fulfill before we move over is the number of shareholders. And if I'm not mistaken, you need at least 500 shareholders or more to be eligible for main board. And our last count that when we look at the number of shareholders, we have about 400 plus, so we are still short. So we hope that again, avenue like this, we are able to introduce our company, all right? Because we are small cap, right? There are not so many shareholders, so we hope that people are aware that we are actually a very well-run company with good return on our investment. So there will be more shareholders, and so once we are able to achieve the minimum number of shareholders, we would apply to move to a main board. So once it's again, there's also a lot of good effects if you are able to move quick, because when we speak to institutional investors, right, most of them have mandate to purchase shares in their funds from main board company. So while they like our returns, they like our dividend, they like our growth, right? So they are still waiting for us to move over the main board. Just to give a perspective, since there are no question from the audience, in Malaysia, we are the dominant eye care provider in private healthcare, and so much so that for every cataract surgery that's done in the private healthcare, you can be assured that about 2 or 3 for every 10 surgery, 2 or 3 are done by ISEC group of doctors. So we actually, that just show that despite a very big market with many eye doctors, ISEC is actually a very influential and also substantial market share in Malaysia.
Okay, so there is plans. Okay, the next question from this gentleman again. Thank you, Dr. Lee. Are there plans to further expand the number of centers in Singapore?
Yep, that's a very good question. I think currently we have 4 ophthalmologists in Singapore, all based in Gleneagles Hospital. Our plan will be 2 prongs. The first, I'm going to increase more doctors in our present centers. That is to mainly to maximize the facilities, the usage of the facilities that we have in Gleneagles Hospital. So once we plan to have another 2 or 3 over the next 2 years or so. And currently we are also working with the Parkway Medical Center in the Woodleigh Medical Center, where we are having a presence now. We're having a clinic there, and we have started seeing patients in collaboration with the Parkway Medical Centers, where they refer a lot of patients to us as well. Of course, after these 2 plans, we also have in mind to have at least 1 more center in one of the hospitals in Parkway, beside the Gleneagles Hospital.
So good, there are plans, good. Okay, this gentleman, Andy Wong, has another follow-up question. How do you share fees with doctors in Malaysia and Singapore? How many ophthalmologists are produced or graduate per year in Malaysia and Singapore? This one.
Okay. We don't share fees. In Malaysia, all right, we are actually facilities provider. That means that we open clinics with operation room facilities, because most of the cases are done as an outpatient surgery. So ISEC's profit comes from provision of all these facilities and also selling of the consumables. I'll give you an example. If you go for cataract removal, all right, there are 2 components of fees. Your surgeon would charge your fees, all right? That we'll collect for the surgeons. After some administrative costs, we return back all the money to surgeons. So the more the surgeons work, the more famous they are, the surgeons would be paid more because of their their popularity and their fees. How we charge is that in the same cataract surgery, the patient will have to buy lens, implant, they have to use the operating room, there'll be operating room charges, etc. And this is where we make our profit by provision of care. So that's why there's not really a fee splitting model. That's in Malaysia. So in a way, we are provider of care in Malaysia and similar in Myanmar. So we don't split fees. But I say because the doctors work in our platform and they are happy working there, and they are actually also equity partner in ISEC because that will align our interests together. So they see patients there, they work, they provide their service in ISEC, so they earn their fees in ISEC, and ISEC as a provider of healthcare in Malaysia and in Myanmar model, we would able to make profit. So our model overall is pretty good, and so we are still able to get about 20% PAT. All right. In Singapore, Dr. Lee, you want to elaborate?
Yeah, Singapore likewise, we take a percentage of what the doctor's income would be. So in a way, the doctors are not only our employee, also our consultants. So there is some splitting of the fees and for us and with our Singapore doctors. The other question asked is how many ophthalmologists are produced in Singapore and Malaysia. Yes. So in Singapore, generally we produce about 10 ophthalmologists per year at the current state.
In Malaysia, my forecast is we produce 20 ophthalmologists a year, all right? But we have about 34 million people. That means that even the next 10 years in Malaysia, we can only produce 200 more new doctors, right? So in ophthalmologists, therefore you can see that the rate determining factor to growth is actually the number of specialists. But I say, if I presented, right, as a group, we have about 60 odd doctors now working as a group. So we are actually quite one of the largest employer of private eye care doctors.
Right. Okay, there are no more questions from the public, or not yet anyway. I'll just ask a question about dividends. You guys pay quite generous dividends, quite a significant portion of your profit. Is there a fixed amount that you have, for your dividend policy? 90% of net profit after tax or a certain percentage? Is there any guideline?
We don't have a formal dividend policy, but in our IPO prospectus, we mentioned that we would pay not less than 25% of our net profit as dividend. All right. So how we decide how much to pay is that we will see that what are our contingency that we need for expansion, for our merger or acquisition for the following year. All right. And then if anything in excess of that, most of the amount, like, we would try to give back to the public.
All right. Okay. Are there any more questions from the audience? I'll just give it another few minutes. Okay, maybe I can, while waiting for the whether the audience has got any questions, I can touch upon sustainability and ESG, right? So what are ISEC Healthcare's key sustainability initiatives and ESG commitments?
Okay, the ESG, of course, there are three components category, environmental, right? So what we do is that in ISEC, we try to be, we are very environmentally conscious, right? We would try to use energy efficient way of doing things. We want to make sure we recycle our waste products. And whenever things that, when we procure instrument or those, we'll make sure that if this instrument are not wasteful, all right, so we will try to invest in instruments that are environmentally more sustainable. And also, we have a campaign, all right, to change, this probably is already a given now. In those days, a lot of lights are still non-LED lights, right? We change all the lights in the whole ISEC premises across Malaysia to LED, which is a fraction of the electrical consumption. And right now, we also want to go on the next step, trying to calculate what's the carbon output by looking at the amount of utility consumption that we have. And we also are very mindful of waste consumption because in healthcare, we have a lot of biohazard disposal. So we actually make sure that we dispose it properly. Example, biohazards or the contaminated products, we contract to a certified third party who will remove all this from our premises. And also how we dispose medication, there's also a protocol. We also accredited in Malaysia by the Joint Commission International. So all our processes are actually recognized by the accredited body worldwide. In terms of social component, all right, so we are actually quite actively engaging the community. We have many campaigns to educate the community. We provide free eye screening to the elderly, to underprivileged homes, and to the also during awareness campaigns like World Glaucoma Day, all right, World Sight Day, etc. And this is been doing annually. And also we education not only to public, we also actively engage in professional education. We at any one time in ISEC, more than 200 students are attached to us every year. All right. For governance, of course, we have very robust governance. As we are a listed company, we have built in all this governance procedure, which is regulated by the SGX. So everything that we do, all right, is according to regulation. And also we are compliant with all the legislation. For example, in Malaysia, we renew our healthcare provider license every year. And for centers, we are regulated by Ministry of Health and renew every 2 years.
Excellent. Thank you. Okay, there is a question from the audience. With a limited pool of ophthalmologists produced yearly in Singapore and Malaysia, can I assume that the faster route of expansion is to enter other countries? Any considerations when choosing which countries to enter?
Yes, that's why I was mentioned earlier.
Vietnam.
We look at our Asia Pacific as our so-called target area. So Vietnam is our next target because we've been to Vietnam many times. We can see the vibrance in the economy, which is almost like China 20 years ago. All right, so you can see that the people there are driven and with a big market. So this is where we are trying to reach out to other doctors over there. I think most countries in Southeast Asia, we have a problem with number of specialists, but we are trying to, sometimes it's not just the quantity, it's the quality, all right? So we are trying to engage partners who have the same vision, who wants to build center of excellence, and then to come into our group. And so we are actually actively engaging in this respect.
I just want to add some points about a point about Myanmar situation. In fact, despite the political situation in Myanmar, we still seeing a very steady and healthy growth in our Myanmar facilities and our Myanmar operations. So the problem is that for Myanmar, even though there's a political uncertainty, but a lot of Myanmarese, the Burmese cannot now travel abroad. They otherwise would have gone to countries like Vietnam or Thailand to seek treatment, and now they have to stay put in the country. And these are the group of people who in turn will come to our Myanmar facilities for treatment and management.
Right. Thank you. Okay, there is a question. Do you have a percentage of company turnover dedicated to corporate social responsibility, CSR? Any idea what percentage?
I don't have a percentage offhand, right? Because most of the, fortunately, most of the social CSR activities are not very costly, to be honest. It is just the doctors volunteering the time. As you know, that if we do a eye screening, all right, all we do is that usually we work together with a third party, usually let's say a Lions Group, Rotary Club, or certain NGOs. Then we would provide our manpower, our nurses, and we don't pay them, all right? These are all volunteers. So basically the amount can be expensive, but it's not quantified in that sense. It's a doctor's time. So basically it is not very expensive. So sometimes we do some of the occasionally if the patients from the elderly homes, all right, who are poor. We are not talking about homes where made for commercial in the sense that people who can pay but they put their family there. These are people probably have no caregiver, so we will do a subsidized surgery for them. And when do subsidized surgery, again, ISEC, because of our network, we usually get free lenses from the vendors who sell us lenses, all right? And doctor volunteers their time. And so basically, it doesn't cost us very much, to be honest.
Okay, great. Okay, another question here about regional expansion. What about China, which is the biggest market in Asia?
Okay, China, when we first started IPO, all right, we actually look at China as a potential target, right? And at the time, as you know, that was back in the early 20s, right, 2014. And China at that time, although they are fairly developed, they are still quite backwards in terms of how the provision of care was. But things happen, and you know that 10 years is a long time in China, right? China, in the 10 years, they have actually come in the first tier or second tier city, has progressed so much that they actually are comparable. I mean, their services are comparable to that in Singapore and Malaysia. So basically, we felt that the opportunity to go into China and provide a different level of services is probably not that much anymore, because the Chinese themselves have caught up. Right, just look at automotive. Right, prior to pandemic, they do not export EV. Right now, they capture the world's EV in 4 years. Same thing is in healthcare. And then the other thing that while we were looking at China, we also engaged into the largest ophthalmology player in China called eye hospitals. In a way, the collaboration has turned out to be something slightly different. It ended up that yes, we are in collaboration, but IR has bought 51%, all right, of our listed company shares. All right, so basically, in a way, we are collaborating. Not so much that we are entering China, but the Chinese actually now do own a substantial part of our shares, and with that, we collaborate in different way, in a economy of scale, skill transfer, etc. with the China's group.
Okay, great. Thank you so much for those answers. Ladies and gentlemen, any more questions before I wrap up the session? None? Going once, going twice? Okay. All right. Thank you, everyone, for this very enlightening session. We hope you have found this Corporate Connect program useful. If you have missed any of it, you can rewatch this webinar on SIAS's YouTube channel. Corporate Connect is our bi-weekly webinar, so please visit our website to get updates on upcoming investor education programs and initiatives. Our next Corporate Connect will be held sometime in January next month. And if you've got any suggestions on companies that you would like us to feature, please type into the chat box. Until then, thank you again to ISEC Healthcare, Dr. Wong and Dr. Lee, for their time in presenting their company's profile. I hope it has been helpful to both sides, the company as well as the investment community. And with that, we at SIAS would like to wish you all a Merry Christmas and a Happy New Year. Thank you once again for attending, and good night.
Thank you, everyone. Bye-bye.
Thank you. Bye.